Hey guys, hope you are doing absolutely amazing. TJ Atkinson in the building, your finance coach. So today we're going to be talking about a very important topic. We're going to be talking about how to improve your credit score. Now, to many people, you don't think about this on a daily or weekly basis, and that's probably why your credit score isn't as high as it should be. In order to improve your credit score, you've got to be intentional about it, which means you've got to focus on it, which means you've got to look at it, which means you've got to put a plan of action in place. Hey guys, before we get straight into this, make sure you smash that subscribe button, make sure you punch that like button in the face, and if you get some value from this video, make sure you leave a comment so I know that it's actually helping you to level up financially. So let's go, guys. Your credit score is so important, and many people don't pay enough attention. And by not paying attention to your credit score, guess what you're doing? You are costing yourself more money. Well, how does it cost you more money? How does that make sense, TJ? Well, let me show you something. The level in which your credit score is will determine the sort of rates that lenders lend you. Did you catch that? If you are bad, or your credit score is bad, you will still get people lending to you, but it will be at a completely different rate. So now, again, I'll show you guys on the screen. My credit score is 964, which isn't great. It's gone down by 9 points because I'm in the middle of a purchase. So again, that's affected my credit score. So again, just one tip. There are tiny little things, well, that's a major thing, that affects your credit score. So you've got to pay attention to it. So if I was to buy a property and someone with a score of 400 wants to buy a property, both of us can get accepted for a mortgage. I might be able to get a high street lender. So the current lender for the purchase I'm making now is NatWest. At 400, you might get accepted for a mortgage, but it might be some backstreet lender. And guess the difference here is, and why I said it costs you more money, is because I'm classified at 964 as excellent, it means my risk level is lower. So it means the bank or the lender can give me a lower interest rate, as opposed to you right here with 400. In their mind, your class is bad. So it means to them, they've got to protect themselves by charging you a higher rate of interest. So for example, I might be charged 2.65% for this purchase, but you might be charged 3.8%. So again, that's what I'm talking about. You've got to work on your credit, because it's not only stopping you from being able to buy and progress and purchase, it's costing you money by having bad credit. And most people don't even think about that, because you live your life, you go about your life, but you're not intentional about dealing with your credit because you're not noticing it on a daily basis. If you wanted to buy a car in finance, I might be able to get a lower rate because my credit report shows that I'm good with money, I make all my payments on time, I am responsible, I am trustworthy, so I would be offered a lower rate of interest. However, someone on this side, at let's say 400, might be deemed as somebody that they've got to take more caution with, so it means you might be offered a higher rate of interest on that car. Why is it important to sort your credit out? Why is it important to work on improving your credit? I want you to look at this just for dramatics. Think about it this way. Let's pretend I'm the bank. You come to me and you say, hey, TJ, listen, can you lend me £100,000 because I want to buy a property? And I say, well, no problem at all. I mean, I've got all this money here. I would love to lend it to you. But before I do, John, or before I do that, Sarah, let me just go and check with other people that have lent you £10, £20, £50 and £100 before, so I can determine whether it makes sense to give you £100,000. And you say, well, no problem at all. So what they do is they go on your credit report and they look at the list of people that have worked with you before or lent you money before or you've taken out credit with before, and they say, hey, yo, listen, T-Mobile, you see John's approached me to lend him £100,000. Now, I know he's worked with you before. Is it possible if you give me an overview or tell me whether John is a credible person for me to give money to? And T-Mobile say, listen, don't do it, bro. Don't give him or her that money, because they still owe us money from their $12.99 mobile phone bill. Or they haven't paid their mobile phone bill, or they miss all their payments. Okay, well, no problem at all. I'm not going to judge you or judge your application based on just one person saying you haven't paid. Let me find out from more people. Hey, credit card company. This person has a credit card with you, right? Yes, they do. Okay, well, They want me to lend them £100,000 to buy a property or £50,000 to go towards their car. Do you recommend I give them that money? Well, I don't want to be rude and I don't want to spoil his chances. But if I was you, I wouldn't do it. But why do you say that? Well, because, have a look at this. Look at their credit report. They've missed X amount of payments on their credit card. They pay their credit card late. They are not financially responsible. Therefore, we're having to chase them. So if you're going to give this person money for a house or a car, there's a likely chance that you're not going to get that money back or the payment will be late. That's why it's important to sort your damn credit out. Because it gives people an overview and they judge you based on that overview and they say, is this person trustworthy enough for me to give them credit or lend them money? So let's get straight into how you can start to work on your credit. Number one, sign up with one of the 3 major credit reference agencies. We all know them already, but it's really weird that we don't have the app on our phone, or we haven't downloaded it, or we haven't paid for their service. So let's go through the 3 of them. The first one is Experian, the second one is Equifax, the third one is TransUnion. What you want to do is sign up with one of those 3 companies. In fact, sign up with all 3 of them because they all operate completely different. They all produce a credit score. And different companies in the UK use one of these 3 companies. However, most companies use Experian, which is why I'm going to spend more time talking about Experian in this video. Now, Experian offer a 30-day trial. Experian offer a 28 or 30-day trial, which means you can download your report and see what's on your file. This is the biggest mistake people make. They don't look at the information that's available to every lender about them. But at one point, you're going to want to purchase something that's worthy or needs credit. So it makes sense for you to know what's on there before the lender goes on there. And the reason you want to know is because there might be issues and there might be mistakes and there might be errors and there might be frauds and there might be things that you can rectify before the lender goes and checks it. So that's why, number one, download Experian, download your file. In fact, print it out and go through every single company and every single thing that it talks about on your report. The credit report will talk about any credit cards that you have. It will also indicate how much you've used on your credit card. So if you've got a credit card that gives you a £10,000 limit and you've used £1,000, it would state it on there that you've used £1,000. If you have an overdraft, it would say your overdraft is £500 and you've used £350. It will talk about your mobile phone bill. It will talk about your it will talk about your mobile phone bill. It will talk about anyone you owe money to. It will talk about your gas, your electric company. It will show anyone who has access to seeing who you are financially. They're not asking to see what's in your bank. They're not asking to see the illusion you that's rude. They're not asking to see the illusion you put on Instagram. This is the truth about you financially. And that's going to determine how finance companies, credit agencies treat you. And that's why, number one, download your report and get a highlighter and go through every single point and see whether there are any errors on there. That's one of the reasons many people have low credit scores, is because once in a while there is an error on there that shouldn't be on there. But we're going to talk about what you can do to get that sorted. So once you download your credit report, you will see some things called hard searches and you'll see some things called soft searches. Don't stress yourself too much about soft searches. Only you can see soft searches. So this is essentially when you are trying to buy car insurance and you go and comparethecar.com or confused.com and they do a soft search. A soft search simply means someone goes and checks, but they don't leave a footprint. So it means no one else can see that your credit has been checked. So a soft search goes in your credit history, but it doesn't go down as a mark, which means when you apply for hard credit, the person that's applying to see whether you are suitable for that credit will not see that specific search. And there is a benefit right now because a lot of credit card companies and a lot of companies, as I mentioned before, will always, before you apply for a credit card or before you apply for something, they might say, we can perform a soft search for you to give you an indication whether you are going to qualify or not. And that helps so you don't do as many hard searches as possible. And we'll talk about hard searches later, but more important, it's important to understand that the credit companies, the credit reference agencies, anyone that's going to lend you money, they can see hard searches, and the more hard searches they see on your file, it simply means to them that you are screaming for money and you are screaming for finance or credit from somewhere, and that doesn't look good. So stop doing hard searches for things that you don't need hard searches for. One of the major reasons that companies would like to check your credit file is to check whether you are credible, whether you are trustworthy, but more importantly, whether you have any CCJs against you, which are county court judgments. Do you have any debt relief orders, or have you been made bankrupt at one point? Number two, let's go and talk about hard searches again. So as I mentioned, a hard search is a footprint. It's a stamp on your credit file by somebody that you've engaged to provide you with some sort of service or some form of credit. Did you know that you could call that company and have them remove that hard search from your file? Now, in many cases, if you've got a bunch of hard searches, you can call. It's not going to happen all the time and it's at their discretion, but you can call them and say, hey, listen, and explain to them they're human beings. I'm trying to purchase a property. This hard search didn't need to be a hard search. This search, in fact, didn't need to be there. I didn't go ahead and utilize your service. I don't need your service. Is it possible to remove this from my file? And in some cases, they say yes, and in many cases, they say no. But there's no harm in doing that because this helps you to improve your credit. Your credit simply is an overview to allow someone to determine whether you are credit worthy or whether they should give you or lend you money. But if they're seeing hard searches and hard searches and hard searches and hard searches, every time there's a hard search, it weakens your score and it weakens your position in the eyes of the person that's going to lend you money. Number three, if you are someone that moves around a lot, if you're someone that stays in this place and stays in that place and jumps around a lot, maybe you sleep on your friend's couch, maybe you sleep on your friend's sofa bed, whatever the case is, one thing that you've got to do is make sure you are registered on the electoral roll. Whoa! So simple. Make sure you are registered somewhere on the electoral roll. And I'll tell you why this is so important. So simple, but so important. Anyone that lends you money, they need to know that you have a fixed abode for a number of reasons. It just shows stability. It shows that you are a stable person. It shows that you are trustworthy. But number two, it shows that they can turn up at your house if well, they're not going to run up on your house because they're not from the hood. But effectively, it gives them reassurance that if they need to reach you, if you haven't paid your bill, they can send bailiffs, they can file a county court judgment against you, and there's a likely chance that they can retrieve their funds. Being on the electoral roll is an indicator to a lender or to the credit agencies that you are stable. And all you need to do is go on the government website, register to vote, and I'll put the link below. And at that point, you will see your credit score shoot up. Now, I'm not saying you're going to get 999 automatically, but it gives the reassurance to anyone that you are a stable person. While we're talking about the electoral roll, when you are checking your credit file, make sure you are on the electoral roll or on an electoral roll. But number two, make sure your details are correct. Remember this is your financial DNA. So anyone that wants to give you money or lend you money or offer you credit, they need to know that you are who you say you are and you're not just a fake character. So for example, if you've changed your name, make sure your new name is accurate. If you've changed your address, make sure your new address is updated. Make sure that all the details that they have about you is correct. This is so important because what you don't want is a case that John Smith has amazing credit, but in many other places, John has been using his name as John Michael Harry Smith. And there is no financial connection. Therefore, it's difficult for the lender to put these two people as one person and say, okay, it's a safe bet. This person has great credit or this person has a great score. So you want to make sure that all your information is congruent and it aligns and it's the same across the board. That is going to help to increase your credit score. Make sure your address is consistent. So simple. For example, if you're a university student, there's a very likely chance that you've also registered at your university, but now you've moved back home. Make sure you change the address. Make sure everyone is aware that this is your new address and you can start to build credit on this specific address, and that helps. On this specific address, and that's going to help. Number 4, if you see anything negative on your credit file, contact the company. That's the first point of contact. Contact the company and make sure they make amends. So let's talk about two things. If something's been put there incorrectly, you can contact the company to have it removed. Now, bear in mind that this can usually take anything from 4 to 6 weeks to reflect on your report or on your score. So if you need to buy something urgently, if you're in a process or you've saved up enough money and you want to buy a property, if you see anything negative on your credit report, you want to contact the company as soon as possible and persuade them to rectify that and remove or start the process of removing that negative thing or that negative note or mark on your report as soon as possible. The second stage is if you have no luck, if you have no luck reaching out to that company, the second simple thing that you can do is reach out to one of the credit reference agencies, Experian or Equifax. And you can reach out and you can find a report on Experian or Equifax, and they will go out there and reach out to that company on your behalf. So if you can't reach the company directly, then go to Equifax and find a report. They will ask you for information. They will ask you to verify yourself. They'll ask you 1 or 2 questions that only you will know. For example, are you registered to this address? What's your mum's maiden name? Just information to make sure you are who you say you are. And they will go and rectify it. This is vitally important. This is why every single person should check their credit report every single month at least. I check mine every single week, again, because I'm a property investor. I purchase property. I need to make sure that there's nothing that's hindering my purchases. But the reason I say check it at least every single month is because fraud is real. Many people don't think about it. Many people don't say, oh my God, what's the likely chance that I'm going to become a victim of fraud? That's the truth. You don't think about it. But there is a likely chance, and it happens quite often, that people will use your information to take out telephone bills, to take out telephone contracts, to buy laptops, to take out credit cards. You could be a victim of fraud. But you don't know that that's what's keeping your credit score from increasing, because there is a mark against your name for something that you have not done. And this is why it's important to have a look at your credit report and keep an eye on your credit report so that you can notice if there's anything on your credit report that did not belong to you. For example, there could be a Vodafone telephone bill. There could be an iPhone on finance. There could be a credit card for a company that you don't even bank with, but somebody has taken out credit in your name. They've misused it. They haven't made the monthly payments. They haven't repaid back the credit card company, and then that's affecting you, because as far as the agencies are concerned or the credit card company is concerned, you are responsible. So again, if you notice anything on your credit report that isn't by you, contact the company directly and then contact Equifax or Experian to explain the situation, and they will remove that. And that could be what's hindering you from increasing your credit score. Number 5, credit utilization. You are encouraged to stay below a certain percentage on all available credit. So for example, if you've got a credit card and you have a £10,000 limit and you've used £7,000, it means you are utilizing 75% of the credit that's available to you. That tells a whole story. That says to your lender, it says to the credit card company, it says to the credit agency that you are not in the best position financially. It means you live on your credit card. It means you're using credit to live. What they suggest is you use between 25% and 30% of your credit utilization allowance or your credit utilization ratio. And that's a safe limit to use, because that's what they expect you to use your credit card for. If you are over 25% of your credit utilization ratio, then you need to work on that. Now, I have another video which I'll put the link somewhere below in terms of how to get out of debt, but I'll talk about this just very slightly. So for example, if you're making monthly minimum payments, which I don't encourage you to make monthly minimum payments, and again, that's for another video. If you want me to explain why you should not make monthly minimum payments, then let me know in the comment section, because I know that's what a lot of people are taught, and I get it because it's a delicate topic, because it's about money. It's difficult for me to say, hey, don't make your minimum payments, because I don't know what your financial situation is. But again, I stand by that. If your minimum payments are £25 a month, do not make the £25 a month minimum payment. Do not make the £25 a month minimum payment. Increase it. £26, £27, £28. Even if it's an extra £2 or £3 or £5 extra, that helps to chip away at the interest. Please stop making minimal payments. People can say, what are you talking about? Well, that's all I can afford. The truth is this, you can afford an extra £1 to chip away at the interest. So try your best to always pay your credit card before the end of the month. But if you are making minimal payments, please do me a favor, add a little bit extra. That kills off and chips away at the interest. It's the interest that keeps you in debt. If you're making minimal payments, it could take you 3 years to pay off the entire credit card. If you're making small incremental additional payments, it could chip away at least a year, if not 2 years, on that credit. Do not use your credit card in a cash machine. Never in your life should you use your credit card at a cash machine. It tells a completely terrible story about you financially. It tells the credit card company that you are very desperate for money, and what they do is they take advantage of that by charging you crazy rates, but at the same time it paints a picture that you are desperate. Credit cards are not supposed to be used to withdraw cash. It costs you so much more to use your credit card at a cash machine, but it tells the story. Because remember, your credit report is a story, and it says that this person is desperate and they're not in the best financial position, and that could also affect your score. This is probably the most important before I round up. Find out who you are financially linked to. This is important. And this is where it gets a bit tricky, because you get boyfriends and girlfriends and they've been together for 2 days and they say, oh my God, I love you, babe. No, I love you, babe. So let's buy a house together. But the truth is, Dwayne is terrible with money. Dwayne has about 20p in his pocket and he's always borrowing money, but you want to buy a house with Dwayne, but you two fall out, and guess what? You're left carrying the mortgage or carrying the loan or carrying the finance, but you're still linked to Dwayne, and Dwayne's terrible with money, and you're financially linked to Dwayne, then guess what? That's going to affect your credit. So again, before you buy a property with a partner, make sure you understand if they're credit worthy. Do your own credit report and credit search on them. In fact, give them a credit score. You should absolutely not be buying a property with anyone unless you have asked them the same question that the bank or a lender would ask them. What's your direct debits like? Have you missed any payments? How are you financially? How much do you actually earn? Where do you live? The truth is, some people don't even know where their partners live. The point I'm trying to make is, if you're financially linked to someone that's bad with money, it will affect your credit score. And if you are no longer financially linked to that person, then you can call Equifax or Experian or TransUnion and get that person removed from your file and sever or destroy or remove the link. Because one person might have great credit, the other person might have bad credit, but altogether, you now become average. So be very careful. And that's why the Bible talks about don't be unequally yoked. There we go. That's me preaching for 1 second. I came across a few companies that can also help you improve your credit. I'm not affiliated with them. I've just read up on them and I think it's pretty much a good idea. One of them is Portify. I like what they do. It's a really interesting concept. Essentially, you pay them on a monthly basis. They then report to the credit agencies. So you sign up to them on a membership basis. They then report to the credit agency that you've taken out some form of credit with them. And every single month that you make your payment to them, they report back to the agencies that you are making payments, and that's improving your credit score because it's showing that you are consistent and you have credit, but more important, you are making those credit payments. So again, as I said, I'm not affiliated with them. I don't know them. I came across them as part of my research for this. And there was another company called Lockbox as well. I'll put their links below. Check them out for yourself, guys. Do me a favor, if you get value from this video, make sure you punch that subscribe button in the face. Make sure you share this video with someone, because this might just change their lives and help them level up financially. Look, if you've got a 10-year-old to a 21-year-old that you want them to become much more financially savvy, I have a training program that teaches young adults how to do better with their money, how to level up financially so they can be more, do more, and have more.